Sir, very happy afternoon to all. Sir, this is a very quick marathon for the second head of income, that is income from house property. As we all know that, one of the easiest head of income. The chapter is starting like this, my dear lovable students. When we start salary, we taught about 10.5, 10.10, 10.10A, 10.10A, 10.10B, 10.10C, 10.11, 10.12, 10.13, 10.13A, 10.14. That is exemptions or retirement benefits. The same way, chapter income from house property is saying that if you are having income for these people, then it is fully exempted. For example, income from any farmhouse, farming part of agriculture income. If you are having any income from house property from the farmhouse, it is fully exempted under section 10.1. Because in India, agriculture income is fully exempted. Next one, annual value of any place in occupation of ex-ruler. That is, ex-ruler like king or someone, their place you are letting out and you are getting some rental income, that is fully exempted under section 10.19A. Income from property, house property of a local authority. For example, there is a local authority, Chennai, Greater Chennai Corporation. If they are having any house property income, that is fully exempted for them under section 10.20. Then income from house property for an approved scientific association, section 35, expenditure on scientific research. Such people got any IFHP income, that is fully exempted for them under 10.21. Sir, property income of university, education institutions, etc. Those people are called as 1023C series organization. And if you are a registered trade union, then for the trade union, if they are having any income from house property, that is fully exempted under section 1024. And if there is a political party like BJP, if they are having any house property, that is fully exempted under section 13A. So if these people are having income from house property, it is fully exempted under section 10. So what we are supposed to understand, section 10 is exemption, which is applicable for every heads of income. 10.10 gratuity. But the only thing is, gratuity, it is not fully exempted. A part is exempted and part is taxable. But here, no such part and all. It is fully exempted. For example, political parties getting house property income, or local authorities getting house property income, or ex-ruler is getting any house property income, or registered trade union is getting, sir, house property income. Come on. Sir, in order to tax an income under the head income from house property, what are the conditions to be satisfied? That is called as chargeability. Every head of income is having a charging section. For example, salary section 15 is the charging section. House property section 22 is the charging section. PGBP section 28 is the charging section. Capital gain section 45 is the charging section. And IFOS section 56 is the charging section. The duty or the role of the charging section is that section will tell what are the income to be taxed under the respective head of income. Are you all really with me? What section 22 of the income from house property is saying that in order to tax an income under the head income from house property, first of all, assessee should be the owner of the property. Assessee should be you should be the owner of the property. Number two, property should not be used for assessee's business or profession. It should not be used for the assessee's business or profession. And that property should consist of any land or building appurtenant thereto. That means it should not be a bare land. If you are renting a bare land, that rental income will be taxable under IFOS, not under IFHP, because this is income from house property. On that land, property or building should be there. And property held as stock in trade and during the pendency of sale property let out, then such income will also be taxed under income from house property. For example, Casa Grande is there. Casa Grande constructed a big building having 25 flats, but there is now they are thinking that market is not good. So they are thinking that we will sell after 2 years. In between the cycle gap, they are letting out this property. Even though for Casa Grande, that building 25 flat is a stock in trade, if you generally sell or if you get any income from stock in trade, that will be taxable under PGBP. But even though it is a stock in trade, that rental income will be taxable under the head IFHP. This is what the 4 conditions are all about. So number 1, assessee should be the owner of the property. Assessee should not use the property for his or her own business or profession. And property should consist of any building or land appurtenant thereto, or property held as stock in trade and during the pendency of sale. Property let out, then such rental income will be taxable under the head IFHP. Generally, this is a very easiest to the easiest head of income. Generally, it is a 5-step approach. Generally, it is a gross annual value. Step number 1 is what? Gross annual value means the income what you are declaring. For example, gross salary we are saying in salary chapter. The same way, gross annual value. Sir, from that gross annual value, LT bar MT, local tax or municipal tax, paid by the owner. Two things you should be taken care. First of all, this is on cash basis, my dear lovable students, and this should be paid by the owner. In exam, two adjustments they will be asking. Sometimes LT bar MT will be payable, no deduction. Or sometimes it would have been paid by the tenant, no deduction. You should be taken care of that adjustment. Are you really with me? You will get the net annual value. So from the gross annual value less LT bar paid by the owner, you will get the net annual value. From that, you can reduce deduction under section 24A and deduction under section 24B. If it is salary, we are having 3 deduction: 16 subsection 1A, 16 subsection 2, 16 subsection 3. The same way, house property is having only 2 deduction, 24A and 24B. 24A is 30% of the net annual value and 24B is interest on borrowed capital. You will get the answer as income from house property. So technically, my dear lovable students, sir, gross annual value is the income. From there, you can reduce LT bar MT. LT means local tax, MTB municipal tax. This local tax or municipal tax will be collected by the state government, and this gross annual value is for the central government. So central government is saying that we are going to collect income tax. So if any tax has been paid to the state government, which is directly attributable to a property, can we claim it as a deduction? Are you all really with me? You will get the net annual value. From that net annual value, reduce 30% of the net annual value, because for property, painting, insurance, repairs, all will be incurred. Whether you incurred or not, irrespective of that, on an ad hoc basis, you can claim 30%. Don't reduce any other expenses. The question will be tempting you to give lot of other information. Don't reduce that and all. And interest on borrowed capital. This is accrual basis, whereas LT bar MT is cash basis. Even though you have not paid the interest, still you can claim it as a deduction under section 24B. This is the difference between LT bar MT and also the interest on borrowed capital. Can I proceed, sir? I'm moving into much detail with regard to income from house property. Property classified into 2 categories. One is SOAP, other is LOP. There are 2 types of property are there. One is self-occupied property and other is let-out property. Right, sir? Assume you are having a house property with you, my dear lovable students. With that house property, as per Income Tax Act, you can only do 6 things with that house property. You can do only, number 1, fully self-occupied. For the entire 12 months in a year, you can fully self-occupy the property. Are you all really with me? Or fully let out property. Fully let out means the entire 12 months you can let out the property. Then let out property with vacancy. Sir, entire 12 months I am ready to let out, but tenant has not came. Are you all really with me? Partly self-occupied and partly let out. For the 6 months, first 6 months it was a let out property. For the next 6 months it became a self-occupied property. Or self-occupied property, then let out property. Portion self-occupied, portion let out. In the sense means ground floor is self-occupied, whereas first floor is let out property and deemed to be let out property. Actually, I have not let out the property. But what Income Tax Act is saying that you have to assume it as a let out property. So with one property, only 6 possibilities are there. Number 1, fully self-occupied, fully let out. Let out property with vacancy, partly self-occupied, partly let out. Portion self-occupied, portion let out, deemed to be let out property. Now we are going to talk about if a property is fully self-occupied property. If you are having own house, my dear lovable students, if you are staying in that house, I am talking about that house. Sir, if it is fully self-occupied property, can you let out that property? No. So there will not be any GAV. There will not be any. Since you are not declaring the GAV, what government is saying that even though you will pay LT bar MT to by the owner, cannot be claimed as a deduction. Because what Income Tax Act is saying that you have not offered income. Then why are you asking deduction? Logic. That's it. Then automatically the NAV will be 0. Net annual value will be 0. Less deduction under section 24A. Since the NAV is 0, 0 into 30% will be 0. You will be not applicable. Are you able to appreciate? Then 24B, interest on what capital? Borrowed capital. What, sir? If the property is a self-occupied property, either you can claim 30,000 or you can claim 2 lakh as the case may be. So the maximum loss under the head income from house property will be 30,000 or 2 lakh as the case may be. There are two limits are there, lower limit of 30,000 and higher limit of 2 lakh. So in order to claim a higher deduction of how much lakh? 2 lakh, assessee should satisfy 3 conditions. Loan should be taken on or after 1/4/1999. That is a cutoff date. If the loan is taken on or after 1/4/1999, and number 2, such loan should be used for the purpose of CA, construction or acquisition of the property. That means with that loan, you are not supposed to do repair. You should do either construction or acquisition. Such construction or acquisition should be completed within a period of how many years? From the end of the financial year in which the loan has been sanctioned. That means if these 3 conditions has been satisfied, if loan has been taken on or after 1/4/1999, loan should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been taken. If that is the case, my dear lovable students, you are entitled to claim higher deduction of 2 lakh. Otherwise, lower deduction of 30,000 will be applicable. Are you all really with me? A very important concept called as interest on borrowed capital, prior period interest. What period interest? I'll just explain this prior period interest with a small chart. Try to understand and picturize, my dear lovable students. Sometimes I would have taken loan on this date. On date, for example, sir, on 15/8 of 2021. From the date of taking loan, I would have started construction the house. But in 21-22, construction of house would not have been completed. In 22-23, construction would not have been completed. In 23-24, construction would not have been completed. On 15/9/2024, that's what our financial year for our examination. On this day, sometimes you would have completed the construction. Point number 1. First check in what financial year you completed the construction. 24. Then what Income Tax Act is saying that if you analyze 24-25, actually from 1st of April till 15th of 9/2024, it is pre-construction period only as per accounts, correct? But Income Tax Act is saying that if the construction has been completed in previous year 24-25, then from the start of the previous year itself, it should be treated as current year. It should be treated as, that means always the prior period interest should start from the date of taking loan. From the date of taking loan means when I taken loan, 15/8/2021 is the date of taking loan. Till, my dear lovable students, I have completed the construction on 15/9/2024. That falls in our previous year 24-25. What Income Tax Act is saying that always finish the prior period interest on 31/3/2024. 31/3/2000. So always starting point will be date of taking loan. And always ending point will be 31st March of the immediately preceding previous year in which the construction has been completed. Immediately preceding previous year in which the construction has been, that means for 21-22, for 22-23 and 23-24. Total how many years? This 3 years actually property was under construction. That means 3 years I would have paid interest to the bank. But that interest cannot be claimed as deduction under 24B. Because property itself has not come into existence. In order to claim, sir, anything under IFHP as per section 22, 4 conditions should be satisfied. Assessee should be the owner of the property. Where is the owner man? It is under construction, correct? Then there is no question of ownership at all. Then if you claim, actually in 24-25, our financial year, you completed the construction, comfortable. Then, my dear lovable students, if the entire 3-year interest, which is technically called as prior period interest, if you claim as deduction in previous year 24-25, then automatically 24-25's income will be swaha. Correct? So, what Income Tax Act is saying that if you are having any prior period interest, don't claim the prior period interest in one stretch. We will not allow to claim the prior period interest to claim it as deduction in one stretch. Claim over 5 years. That is, previous year 24-25 you can claim 1/5. Previous year 25-26 you can claim another 1/5. Previous year 26-27 you can claim another 1/5. Previous year 27-28 you can claim another 1/5. And previous year 28-29 you can claim another 1/5, my dear lovable students. Are you all really with me? So, as an assessee, 1/5 can be claimed in the previous year 24-25. And even in 24-25 loan will be going. Assume that no principal has been repaid for our mathematical computation purpose. In 24-25 also you will pay interest. So total interest on what capital is equal to? Borrowed capital is equal to 1/5 of the prior period interest plus 100% of the. Actually, as per accounts, this is also prior period interest because the construction has been completed only on 15/9. Actually, till this time you have to treat it as prior period interest. But tax is saying that we are not following date concept. We are not following month concept. This is not AS 16 borrowing cost to talk like that. This is income tax which will go as per financial year basis only. So always start the interest on borrowed capital from the date of taking loan. Till 31st March of the immediately preceding previous year in which construction has been completed. With this background, now you go through interest on borrowed capital. Can be classified into two categories. Prior period interest and what interest? Always prior period interest will start from the date of taking loan till 31st March of the immediately preceding previous year in which construction has been. And actually for our example, 3-year interest came, correct? That 3-year interest can be claimed as a deduction under section 24B in how many equal installment? 5 equal installment. Plus you will be having current year interest. This current year interest will start from 1/4/2024. Am I right, sir? Till 31/3/2025 because actually this period is, sir, pre-construction period as per accounts. But we have considered only till 31st March in tax. Comfortable? So this 12 months will be treated as current year interest and that can be claimed as deduction in one shot on an accrual basis because LT bar MT paid by the owner but IOBC is not paid. Even if it is payable, you are entitled to claim it as a and claim as a deduction in how many installment? So one line summary of the entire discussion is IOBC is equal to 1/5 of the prior period interest plus current year interest. Can I proceed, sir? My dear lovable students, with regard to default tax regime, very important part. If the assessee has opted for what tax regime? Default. Then he is not eligible for deduction under 24B, that is interest on what capital? That means if you are traveling through the default tax regime, there is no question of self-occupied property concept at all. Only concept of let out property. Because under self-occupied property, only one section will be applicable, which is 24B. If 24B deduction cannot be available, we can conclude that under the default tax regime, there is no concept of SOAP. We are having only concept of LOP. Comfortable? I am continuing, my dear lovable students. These are ICAI charts. You just answer me now from the discussion what we make. Deduction from NAV under the default tax regime. So if an assessee is traveling through the default tax regime, sir, the property may be SOAP or LOP. For SOAP, no deduction is allowable under 24. Under the default tax regime, there is no concept of what at all. Whereas, sir, with regard to LOP, standard deduction under 24A, 30% of NAV can be claimed and interest on borrowed capital 24B is fully allowed. That means if it is a let out property, 100% can be claimed as a deduction. Are you all really with me? Now, coming to the different angle, deduction from the NAV under the what tax regime? Optional tax regime. That means deduction from NAV. Sir, that means I am traveling through the optional tax regime for self-occupied property. Can I claim 24B? Yes, sir. Interest on borrowed capital under 24B is allowed. Sir, if it is LOP, standard deduction under 24A, which is 30% of the NAV is allowed. And interest on borrowed capital under 24B is fully allowed. Are you all really with me? Now, interest on borrowed capital for 24B from the angle of the SOAP. I am going to check it. 24B, sir, where loan is taken for repair, renewal or reconstruction of the what property? House property. Maximum 30,000 in toto. In toto means total for 1 or 2 self-occupied property. Because you should take the loan on or after 1/4/1999, loan amount should be used for the purpose of construction or acquisition. But if it is for repair, renewal, reconstruction, then you are not entitled to claim 2 lakhs, higher limit of 2 lakh. Sir, where this loan is taken for either acquisition or construction of the house property, and acquisition or construction completed within how many year? Within from the end of the financial year in which the capital was borrowed, plus certificate from lender specifying interest payable. No sir, then maximum only how much is allowed? Because you have not completed the construction within 5 years. No sir, I completed the construction within, then 2 lakh in total for 1 or 2 of the self-occupied property. Are you able to appreciate, sir? That means, my dear lovable students, if the property is a fully self-occupied property, it's a 5-step approach. GAV will be nil. Less LT bar MT paid by the owner, not applicable. NAV will be nil. Less 30% of NAV, not applicable. Less deduction under section 24B, you have to check whether the assessee is traveling through the default tax regime, or if he is traveling through default tax regime, no 24B. If he is traveling through optional tax regime, 24B will be restricted to either 30,000 or 2 lakh as the case may. In order to enjoy 2 lakh, assessee has to satisfy 3 conditions. Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been taken comfortable. I am moving to the second set of property called as fully let out property. Fully what? So there is a house property, you have let out the property. Once you let out the property, will you get rent? Yes sir. So GAV will not be not applicable. GAV will be 3-step approach. GAV will be, that means fair rent or municipal value, whichever is higher. You have to go and see what is the fair rent, what is the municipal value, whichever is. Question arises, what is fair rent? Fair rent means which a similar property in the same locality would fetch. For example, if I am in Nungambakam, Jambulingam Street, I am having a 2 flat. Sir, that is 2 BHK flat. That means, my dear lovable students, this has been rented for 50,000. But the same next building, 2 BHK flat, has been rented for 80,000 means I have reduced that rent. Correct? Really, I would have got 80,000, and to the government, I am saying that I got only. So that's what they are saying, fair rent. You have to see the fair rent, similar property will fetch. Or municipal value. Municipality, the Greater Chennai Corporation would have said that if you rent this property per month, at least you would have get 70,000. So I got only 50,000. But Greater Chennai Corporation is saying that 70,000. Whichever is what? Higher, because it is my mistake. Because the very next person, 50. Municipal value, 70. Whichever is higher. Sir, if I am having a property, there is a chance that I may kill the tenant by saying that per month 1,50,000 rupees I want rent. Are you really with me? This should not happen in India. For that only we are having Rent Control Act. What Act? Rent Control Act. They will fix the standard rent. They will say that at any cost you should not collect more than 60,000. Maximum rent you should collect from this property 60,000 rupees. If an owner asks 90,000 rupees for this property, you can go and give case against that person. Sir, this is the maximum rent he can collect, sir. But he's asking 90,000 rupees, sir. That's why whichever is lower. That's why the step number 1 is fair rent or municipal value, whichever is higher. Whichever is higher or standard rent, whichever is lower. That answer is called as expected. For example, here 50 or 70, whichever is higher, 70. But as per the Rent Control Act, we are supposed to collect only 60,000. So whichever is lower means, so government is expecting maximum 60,000 from this property. That is why its name is 60,000. Are you all really with me? Expected rent. So expected rent or actual rent received or receivable, whichever is. But you are saying to the government that, sir, I got only 40,000, sir. What government is saying? That no problem. Declare GAV as the expected rent. How much? 60,000. That's why, sir, GAV is a 3-step approach. Fair rent or municipal value, whichever is higher or standard rent, whichever is lower. The answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is higher. Are you all really with me? Since you are declaring the income, you can happily reduce LT bar MT paid by the owner. No problem. You will get NAV. No problem. From that NAV, you can reduce 30% of NAV because you are declaring income. Correct? And you can reduce 24B interest on what capital? Borrowed capital. There is no restriction of 30,000 or 2 lakh because that is a picture given by the government to us because the property is a self-occupied property. Here I am declaring the income. If I am declaring the income, I can claim the deduction unlimited because this is a let out property, my dear lovable students. You will get the answer as income from house property. Comfortable? Sir, municipal value means value fixed by the municipal authority. Standard rent means rent fixed by the Rent Control Act. Comfortable, sir? So, two types of property we have done, sir. Number one is fully self-occupied property. Fully, okay. I will be recalling in between the fully self-occupied property. If it is fully self-occupied property, 5-step approach, gross annual value less LT bar MT paid by the owner, net annual value less deduction under section 24A, less deduction under section 24B. You will get the answer as income from house property. What will be the GAV for self-occupied? Nil. LT bar MT? Not applicable. NAV? Nil. Less deduction under 24A. But this will be 30K or 2 lakh as the, and loss will be 30K or 2 lakh as the. First of all, in order to enjoy that 30K or 2 lakh, you should travel through the optional tax regime and should not travel through the. Then, in order to enjoy higher limit of 2 lakh, you should satisfy 3 conditions. Loan should take an owner after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition of the property, and such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been. Super, sir. Now coming to the second type of property is fully let out property. In that, again 5-step approach. GAV is a 3-step approach. Are you all really with me? In that 3-step approach, fair rent or municipal value, whichever is higher or standard rent, whichever is lower, that answer is called as expected rent. Compare expected rent or actual rent received or receivable, whichever is. From this GAV, can you reduce LT bar MT? But only condition is it should be paid, and it should be paid by the, that's what the discussion, municipal tax paid. Allowed as deduction only if it is incurred and actually paid by the owner during the 11 previous year. So first of all, it should be paid, and it should be paid by the, and deduction on what basis? But IOBC is deduction on accrual basis. LT bar MT is deduction on, if the tenant bear the municipal tax, no deduction for the owner for such taxes. If the tenant paid the municipal tax, owner cannot claim it as a deduction. That adjustment may be there in the question. Comfortable? If the taxes paid for the property situated outside India, sometimes in house property may be situated outside India, then also in the hands of resident and ordinarily resident, global income is taxable. So GAV will be taxable in India. So even though LT bar MT has been paid outside India, you are entitled to claim deduction. Are you all really with me? That's it. So the next concept is called as treatment of unrealized rent. Treatment of, sometimes I may let out the property. Tenant may be situated in that building. He will not pay the rent. Then we have to check rule number 4. Rule 4 condition. Rule 4 condition. Rule 4 condition. If rules 4 satisfy, then there is no need to include unrealized rent in the what rent? Received or receivable. That means if you satisfying rule number 4, no need to pay tax for the unrealized rent. What is that rule number 4? Tenancy is bona fide. That means, sir, there should be proper agreement between the tenant and the landlord. Number 2, defaulting tenant has vacated. If the tenant is not paying the rent, you should say the stand up, get out man. Or steps has been taken to compel him toward the property. Vacate the property. Rent tarlena. You should take the steps. Or the defaulting tenant is not in occupation of any other property of the what? Assessee. Sir, if you know that if he is not giving you rent, you should not make him occupy in any of the other properties. That's it. Out na out. And assessee has taken all reasonable steps to institute legal proceedings for the recovery of the unpaid rent. You should try your level best to get the unrealized rent. Or you have to satisfy the AO that legal proceedings would be useless. Sir, even if I give police case, such a person is saying that, so even if I go for the legal proceedings, such things will be useless, sir. So if you satisfy this 4 condition, we can say that rule 4 has been satisfied. Once rule 4 has been satisfied, my dear lovable students, then there is no need to include the unrealized rent in the actual rent received or receivable. That means no need to pay tax for the unrealized rent. Are you able to appreciate, sir? That's what fully let out property story. Sometimes that let out property may be situated outside India. That let out property may be situated in India, or that let out property may be situated. If the let out property is situated outside India, you have to check that what is the status of the assessee, whether the assessee is a resident and ordinarily resident. If the assessee or the person who owns the building is resident and ordinarily resident, global income is income from house property located outside India is taxable regardless of whether the income is brought to India or not. But my dear lovable students, if the assessee is a non-resident or assessee is resident but not ordinarily resident, then if that rental income is received in India, then it is taxable in India. Income from property situated outside India is taxable only if it is received in India. Only if it is. Otherwise, it will not be taxable in India. This is what the second scenario is all about. So, what is the first scenario? Fully self-occupied property. So, if a property is fully self-occupied property, can we recall? Sir, GAV, nil. Less LT bar MT, not applicable. NAV, less deduction under section 24A, not applicable. Less deduction under section 24B, either 30,000 or 2 lakh as the case may be. So, always you will be having a loss from house property which is a maximum to the extent of 30,000 rupees or 2 lakh as the. There are certain important points to be taken into account. In order to enjoy 24B, you should travel through the optional tax regime. You should not travel through the default tax regime. Okay, fine. If you are traveling through the optional tax regime, in order to enjoy higher limit of 2 lakh, assessee should satisfy 3 conditions. Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been. Fantastic to the core. Come on, if the property is fully let out property, it is a how many step approach? 5-step approach. GAV is how many step approach? 3-step approach. Can you reduce LT bar MT paid by the owner? Yes, sir. Will you get the answer as NAV, sir? From that NAV, can you reduce 30% of the NAV, sir? Yes, sir. Sir, can you reduce interest on borrowed capital? Yes, sir. How much? Unlimited. Because since the property is a let out property, there is no restriction. You will be getting the answer as income from house property. The important points to be taken care is this 3-step approach are fair rent or municipal value, whichever is higher, or standard rent, whichever is lower. That answer is called as expected rent or actual rent received or receivable, whichever is higher, is equal to gross annual value. Comfortable, sir? Less LT bar MT. 2 points you should confirm in the question. It should be paid, and it should be paid by the owner. Are you really with me? And 30% of the NAV can be claimed. Interest on borrowed capital can be claimed on an accrual basis. Are you really with me? That's it. Coming to the third scenario, third type of property, let out property with what? Vacancy. That means I'm having a property, and that property I'm ready to let out for the entire 12 months. Sometimes I would have not got good tenant, or tenant would have been vacated during the year. Sometimes some problem may happen, so there will be vacancy. There will be what? The problem, or in the situation number 3, sir, let out property with vacancy. The main problem is entire 12 months I am not able to let out the property. Then what government is saying that since this is a let out property, you have to take the fair rent or municipal value, whichever is higher, or standard rent, whichever is lower, that is equal to expected rent or actual rent received or receivable, whichever is higher. There is a problem. The main problem what we are facing is this expected rent will be for 12 months. Are you all really with me? But this actual rent received or receivable will be for less than 12 months. So generally, if you put expected rent or actual rent received or receivable, whichever is higher, sir, expected rent will become what? AV, GAV. So you will be having a tuck of war that, sir, why I have to pay, sir, tax on expected rent? Because I have not received that expected rent as my actual rent. Are you really with me? So what Income Tax Act is saying that I will give you a solution. Don't worry. Sir, you take the actual rent received in one hand. You take the actual rent received. There are 2 situations are there, my dear lovable students. You check that. whether the actual rent received is more than the expected rent. More than the or less than the expected rent. What this act is asking that, for example, if expected rent for 12 months is equal to, I'm saying example, 1,20,000. Okay, you are having a vacancy. That means you have not let out for the entire 12 months. You let out only for 9 months. But by letting out for 9 months itself, you have earned how much? 1,50,000. Are you really with me? That means your actual rent received is more than the what rent expected. If that is the case, my dear lovable students, then GAV is equal to actual rent received. GAV is equal to, because you got 1,50,000 rupees, you are ready to declare 1,50,000 rupees. For us, if you declare 1,20,000 itself, we are very happy. But you are declaring 1,20,000, we are not bothered about vacancy at all. Comfortable. But if you are saying that if the actual rent received is only 90,000 rupees, then we want you to declare GAV as 1,20,000 rupees, correct? But you will declare only 90,000 rupees, correct? So we want to check the genuinity of the vacancy. We want to check the genuinity of the vacancy. What of the vacancy? Okay, sir, we will check the genuinity of the vacancy now. After we check the genuinity of the vacancy, we will get the answer as vacancy is genuine or vacancy is not genuine. The answer may be vacancy is genuine or vacancy is. Sir, shall we check the genuinity of the vacancy? How to check the genuinity of the vacancy? Come on. Take the actual rent received. How much is the actual rent received? 90,000 is the actual rent received. Correct? Add vacancy rent. Is there any vacancy? Yes, sir. Assume that 4 months vacancy are there. 4 months. Sir, if I let out the property for how much months also? 4 months also. Without vacancy, I would have got rent. Assume that rent is 50,000. Some example I am giving. Are you all really with me? That rent is how much? 50,000. Then 90 plus 50,000 comes to 1,40,000. This is called as actual rent receivable. Actual rent receivable. Are you able to appreciate? Now you compare the actual rent receivable with the expected rent. Compare the actual rent receivable with the. You tell man, sir, is the actual rent receivable is more than the expected rent, less than the expected rent? More than the expected rent, because government is expecting only 1 lakh. If there is no vacancy, I would have recovered 50,000, and my actual rent receivable is 1,40,000. So my actual rent receivable is more than the what rent expected. More than the. So if it is more than the what rent expected rent, vacancy is genuine. Vacancy is, because if there is no vacancy, I would have collected rent. If I would have collected rent, it is more than expected rent. I will give you counter example, man. Assume actual rent received is how much? 90,000. But the vacancy rent is only 20,000. If there is no vacancy, I would have collected only how much? That means 90 plus 20 comes to 1,20,000, 1,10,000. That means even though there is no vacancy, even though I have let out the property for the entire 12 months, I would have collected only. That means my actual rent receivable is less than the expected rent. That means the reason for reduction of actual rent is less than expected rent is not because of vacancy. It's not because of. Because if there is no vacancy, if you have let out the property for the entire, 12 months also, you would have received only 1 lakh. So vacancy is not genuine. Vacancy is not. That means even if you have let out the property for 12 months, you would have collected only 1,10,000. So the problem is not with the vacancy. Problem is with the rent what you have set. You are collecting less monthly rent. For that, what government is asking that if you declare GAV as actual rent received, which comes to 1,10,000, you'll be having a. So if the vacancy is not genuine, my dear lovable students, we will never allow you to have a loss. you have to declare GAV as what rent? That means if the vacancy is not genuine, GAV is equal to that rent. Are you able to appreciate? But if the vacancy is genuine, I am saying to government that, sir, if there is no vacancy, I would have collected 50,000. If I have collected 50,000, my actual rent receivable would have been 1,40,000, which is much more than the expected rent. So because of the vacancy only, my actual rent receivable comes down. Clarity? So the vacancy is what? Genuine. So government is saying that I am ready to accept your claim. That means the GAV, I don't want expected rent. I want only actual rent received. Actual rent received or receivable. So if the vacancy is genuine, actual rent received or receivable. So I will tell you, consolidate once again, my dear lovable students. We are talking about a particular case called as let out property with vacancy. If let out property with vacancy, you have to check the genuinity of the vacancy. We have to check the, before you check the genuinity of the vacancy, you analyze the situation, whether the actual rent received is more than the expected rent or less than the expected rent. If the actual rent received is more than the expected rent, not even required to check the genuinity of the vacancy. Because government is asking only 1,20,000, but you collected 1,50,000, GAV is equal to actual and received 1,50,000 rupees. Comfortable? But if the actual rent received is less than the expected rent, my dear lovable students, you have to check that whether the vacancy is genuine or vacancy is not genuine. If the vacancy is genuine, that means, in English, that means, yes sir, the reason for reduction of rent is because of the vacancy. If the vacancy is not genuine means, even if there is no vacancy, I will not be able to collect expected rent. Have you understood with the example? If the vacancy is genuine, my dear lovable students, then the GAV is equal to actual rent received or receivable. If the vacancy is not genuine means GAV is equal to expected rent. How to check the genuinity of the vacancy is the question. Nothing. You take the actual rent received, add vacancy rent. Then you will get the actual rent receivable. Compare that with the expected rent. Check whether it is more than expected rent or less than expected. If it is more than expected rent, sir, your viewpoint is correct. If there is no vacancy, you would have collected more than expected rent. Comfortable? Then don't declare expected rent as GAV. Declare actual rent received as GAV. Able to appreciate. Whereas, my dear lovable students, if the actual rent receivable is less than the expected rent, even if there is no vacancy, your claim is wrong. That means, if you declare only actual rent received as GAV, we are not ready to accept. You have to mandatorily require expected rent as the GAV. I hope that you are having a perfect clarity. Right, sir? So, GAV will be either expected rent or actual rent received or receivable as the case may be. Since you are declaring GAV, you can reduce less LT bar MT paid by the owner. You will get the answer as net annual. From that net annual value, you can reduce 30% of net annual value. No problem at all. And you can claim IOBC under section 24B as what limited? Unlimited. You will get the answer as income from house property. In case of vacancy, we have to check the genuinity of the vacancy. Am I right? Sir, first you have to take the actual rent received. That actual rent received may be more than the expected rent, or if it is more than the expected rent, GAV is equal to actual rent received or receivable. Comfortable? If it is less than the expected rent, check the genuinity of the, and answer will be vacancy may be genuine or vacancy may not be genuine. If the vacancy is genuine, GAV is equal to actual rent received or receivable. Vacancy is not genuine, GAV is equal to expected rent. Are you able to appreciate? How to check the genuinity of the vacancy? You have to take the actual rent received for the let out period. Add what rent? Vacancy rent. You will get the actual rent receivable. Okay, fine. What I have to do with the actual rent receivable? You have to compare with the expected rent. So the actual rent receivable should be compared with the expected rent. If the actual rent receivable is more than the expected rent, we can say that vacancy is genuine. Then GAV is equal to actual rent received. If the actual rent received is less than the expected rent, we can say that vacancy is not genuine. GAV is equal to expected rent. Are you clear with the third part of the discussion, my dear lovable students? So we can say like this, my dear lovable students. Sir, we are in the let out property with vacancy. If let out property with vacancy, the GAV will be either, sir, expected rent or actual rent received or receivable. Can you reduce LT bar MT? Yes, sir. Will you get NAV? Yes, sir. Sir, can you reduce 30% of the net annual value? Yes, sir. Because it is a let out property. Correct? Can you reduce interest on borrowed capital? Yes, sir. How much? Unlimited. you will get the answer as income from house property. Can I proceed, sir? So, till now, 3 properties has been done. Number 1, fully self-occupied property. Sir, do you have the courage to recall once? Sir, for the fully self-occupied property, you tell me GAV will be nil. Less LT bar MT, not applicable. NAV, nil. Less deduction under section 24A, not applicable. Less deduction under section 24B, 30,000 or 2 lakh as the case may be. Always you will get a loss from house property which may be exactly equal to IOBC. If it is highest, then 30,000 or 2 lakh as the. Okay, the main important point we should carry in our mind is, in order to enjoy 24B, you should travel through the optional tax regime. If you are traveling through the default tax regime, section 24B itself will not be. That too, if you are traveling through the optional tax regime, you can claim either 30,000 rupees or 2 lakh as the case may be. In order to claim 2 lakh rupees, assessee has to satisfy. Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of a year from the end of the financial year. Loan has been taken. Are you able to appreciate, sir? If the property is fully let out property, it is again a 5-step approach. Sir, GAV will be 3-step approach. Fair end or municipal value, whichever is higher or standard, and whichever is lower. That answer is called as expected rent or actual rent received or receivable, whichever is. Can you reduce LT bar MT? Yes, it should be paid, and it should be paid by the. You will get answer as NAV. Can you reduce 30% of NAV? Yes, sir. Can you reduce IOBC? Kitana? Unlimited. You will get answer as income from GAV. Computation already we discussed, man. Fair rent or municipal value, whichever is higher or standard, and whichever is lower. The answer is called as expected rent or actual rent received or receivable, whichever is. Okay, fine. Sir, if there is any vacancy, we have to check the genuinity of the vacancy. Before you check the genuinity of the vacancy, check the situation. Whether the actual rent received is more than the expected rent or less than the. If it is more than the expected rent, leave it. GAV is equal to actual rent received. If it is less than the expected rent, check the genuinity of the vacancy. After you check, you will get an answer that vacancy, genuine vacancy. If vacancy is genuine, GAV is equal to actual rent received. Vacancy not genuine, GAV is equal to. How to check the vacancy, genuinity of the vacancy? Take the actual rent received, add vacancy rent. You will get the actual rent receivable. You have to compare that with the expected rent. If it is more than the expected rent, then vacancy is genuine. If it is less than the expected rent, then vacancy is not genuine. I hope that you are able to appreciate. Now, I'm moving into the next situation, man. The fourth situation called as, sir, let out property for part of the year and self-occupied property for the part of the year. That means there is a property. This is situation number 1. Partly self-occupied and partly let out. Are you all really with me? That means if 12 months are there in a year, my dear lovable students, in this 12 months, you are saying that, sir, for the first 4 months, sir, the property was self-occupied property. And for the remaining 8 months, property has become let out property. Are you all really with me? What Income Tax Act is saying that if that is the situation, it has to be treated as a let out property. It has to be treated as a. Then gross annual value will be expected rent for the whole year. Expected rent for the or actual rent received or receivable for the let out period, whichever is higher. Whichever is, that is nothing, man. You have to take the fair rent or you have to take the municipal value, whichever is what. Whichever is higher or standard rent, whichever is lower. This answer is called as expected rent. Always this expected rent will be for the entire 12 months. For the entire 12 months, you have to take the what rent? Expected rent. But I will be taking the actual rent received for the let out period. Actual rent received for the let out period. That is, I will be taking the actual rent received for the let out period means only for how much month? 8 months. I will take whichever is what? Higher. Sir, anyayam, sir. Because expected rent for the 12 months, but actual rent received for the what? Department is saying that you have to declare whichever is what? Less LT bar MT. Can you reduce, sir? Yes, sir. Sir, you will get the net annual value. Less deduction under section 30%. Can you reduce, sir? Less IOBC. Interest on what capital? Can you reduce, sir? How much? Unlimited. You will get the answer as income from house property. Let me ask you a question, sir. If this property is a self-occupied property, 30% allowed or not allowed? Not allowed. If this property is a self-occupied property, IOBC unlimited or 30k 2 lakh? 30k 2 lakh. Correct? LT bar MT allowed or not allowed? Not allowed. But this property we are treating it as let out property. That is why for you LT bar MT is allowed. That is why for you 30% is allowed. That is why you are, sir, IOBC is allowed. Comfortable? when you are taking this 30%, this 30% is for the entire 12 months or only for 8 months or on entire. That means this 30% deduction you claimed 12 months. IOBC you claimed 12 months. Sir, LT bar MT you claimed 12 months. But when you are declaring income itself, you are asking whichever is lower. Are you understanding the Nyayam? That's why government is saying that since all the expenditure you are going to claim for the entire 12 months, income should also be for the 12 months. That is a logic of, sir, expected rent for the whole year or actual rent received or receivable for the let out period, whichever is higher. Clarity? Only this point will be applicable. All the remaining will be treated as what property? Let out property. You can reduce LT bar MT paid by the owner. You will get the answer as net annual value. 30% of net annual value can be reduced. Sir, 24B, interest on what capital? Borrowed capital can be reduced. You will get the answer as income from. Are you able to appreciate what I am talking to you? That's it. That means if the property is partly self-occupied and partly let out, then it has to be treated as a let out property. The only change in that is, sir, expected rent for the whole year. So like this, expected rent for the whole year or actual rent received for the let out period, whichever is higher. That's it. So that's the next one. Next case number 4, which is, sir, partly self-occupied, partly let out. If it is partly self-occupied, partly let out, my dear lovable students, you have to find out the gross annual value. Only change in gross annual value, which is nothing but expected rent for the whole year or actual rent received or receivable, whichever is less. LT bar MT, can you reduce? Yes, sir. Will you get the net annual value? Yes, sir. Can you reduce 30% of NAV? Can you reduce interest on borrowed capital? Kitana? You will get the answer as income from house property. Able to appreciate. 4 circumstances done. Fully self-occupied, fully let out property with vacancy, partly self-occupied. I'm moving into the 5th scenario called as portion let out and portion self-occupied. That means you are having a house property, my dear lovable students. In that, this is ground floor and first floor. Ground floor, you are self-occupying, and first floor, you have let out. Appreciating what Income Tax Act is saying that if that is the case, prepare a master table, Vijay table. Are you all really with me? First, prepare the master table, which is nothing but particulars. You put the total, you put the SOP, and you put the LOP. That means first you put the proportion. First you put the proportion. Always the entire house will be 100%. In that, how much is ground floor, how much is first floor? For example, 2/3 self-occupied property, 1/3 let out property. All the details in the question you have to write, like fair rent, municipal value, standard rent, actual rent received or receivable, interest on borrowed capital, LT bar MT, all such information you tabulate in a table. Are you all really with me? Such as fair and total will be there. Are you all really with me? That you write it as 2/3 and what? 1/3. Municipal value total will be given in the question because municipal value is for the entire house, not for the ground floor. Correct? That has to be, sir, bifurcated into 2/3 and 1/3. Then standard rent will be given for the entire house. That has to be bifurcated between SOP and LOP. Actual rent received will be there. You put a dash in the SOP because no rent will be attributable to the self-occupied property. You have to write fully for the let out property. Correct? IOBC will be there. That you have to bifurcate between SOP and LOP. LT bar MT will be there. That you have to bifurcate between SOP and LOP. This is called as master table. This is called as what? So this Vijay table is very important, my dear lovable students. Are you all really with me? So if a property is a portion self-occupied, portion let out, first prepare the master table. First prepare the, what is the master table? Proportion. Sir, SOP how much? LOP how much? Actual rent received. For SOP it is not applicable, only for the LOP. Municipal value, right total, bifurcate based upon the proportion. Comfortable? Then fair and standard and LT bar MT, interest on borrowed capital. Then treat SOP as separate property and LOP as separate property. By seeing this table, man, you see this as one question, you see this as one question. That means in this SOP, GA will be nil, LT bar MT not applicable, NA will be nil, 30% not applicable. Sir, check that whether the assessee is traveling through the default tax regime or if he's traveling through optional tax regime, this IOBC, you claim it as a reduction. Otherwise, this part, put it on dustbin. That's it, game over. Are you really with me? Sir, let out property. Anyway, we have to take, man. Sir, every data will be available. Then fair rent, see only this column, not the total column. Sir, municipal value, see only this column, not the total column. Whichever is higher. Or standard rent, if it is there, whichever is lower. You got the answer as expected rent, correct? Or actual rent received or receivable will be there only for the let out portion. Then whichever is higher, you finalize the GAV. That's it. Less LT bar MT, you can less it. You will get the NAV. 30% you can less it. IOBC, you can less it. You will get the answer as income from. That's what I have taken as, sir, SOAP separately, LOP separately. Nil, nothing. 30,000 or 2 lakh as the case may be. Comfortable? That if you are traveling only through the optional tax regime. Here, LOP, 3-step approach we have to apply. You can reduce LT bar MT, you will get the answer as NAV. Then you can reduce 30% of the NAV, my dear lovable students. You will get the interest on what capital? Borrowed capital. You will get the answer as income from. That's it with regard to that part also. So we have done with 5 types of house property. We are moving into the last one. What are the 5? Number 1, fully self-occupied property, fully let out property with vacancy, partly self-occupied, partly let out, portion self-occupied, portion let out, deemed to be let out property. What this concept of deemed to be let out property is? For an individual, 2 houses are allowed in India. Are you all really with me? House number 1 and house number 2 for an individual. But if you are having, sir, 3 houses, and if you are saying that all the 3 I am occupying, this is self-occupied property, this is self-occupied property, this is also self-occupied property, then what government is asking that, then when the concept of let out property will come. So it is your istam. You love this house and this house very much. This house, even though it is really self-occupied, it will be deemed that what property? Let out property. Comfortable? At your option. You can, sir, take this as, sir, self-occupied, then LOP. Or take this as LOP, self-occupied. Or this is self-occupied. This is also self-occupied. This as LOP. And every year you can change the decision also. No problem. Are you all really with me? So, what is step number 1? Treat all the 3 houses SOAP. First, treat all the 3 houses. None are LOP. First, all the 3 as SOAP, which is GA will be nil. Are you all really with me? LT bar MT not applicable, because all the houses are SOAP. So NA will be nil. Are you all really with me? 30% will be not applicable. Only IOBC will be available, provided if you are traveling through the optional tax regime, which is 30k or 2 lakh as the case may be. Always it will end up with 30k or 2 lakh as the case may be. Next, step number 2, treat all the 3 houses LOP. Treat all the 3 houses. Assume all the 3 are LOP. That means GAV will be 3-step approach. Applicable, sir. Less LT bar MT, you can reduce it, my dear lovable students. You will get the answer as NAV. From the net annual value, reduce 30% of the NAV. And IOBC, you can claim how much? Unlimited. You will get the answer as income from house property. So, I have done 2 working. Step number 1, treating all the houses SOAP, treating all the houses LOP. Are you really with me? Now I am going to apply the option. How I will apply? SOAP, LOP. Tell me. House 1, I assumed as SOAP. House 2, I assumed as SOAP. House 3, I assumed as LOP. So since H3 has been declared as LOP, H3 I will never declare as LOP anymore. Are you really with me? In next option, LOP, SOAP. LOP, SOAP. That means house 1 I declared as what? Let out property. And sir, I have not given chance to house number 2. House 2 is let out property, man. So that's what SOAP, LOP, SOAP. So either SOAP, LOP, SOAP, LOP. Are you all really with me? By this, if you put, you will be getting some income. Sir, in which option you are having the lower income, that option you should take, and that house you should treat it as deemed to be let out property. Are you able to appreciate? This is a 6th type of property, my dear lovable students. So we are having solidly 6 types of property in our syllabus. That is fully self-occupied, fully let out property with vacancy, partly self-occupied, partly let out, portion self-occupied, portion let out, deemed to be let out property. Are you all really with me? Sir, can we one time recall the particulars of that? I will say the question, you have to answer me. Are you all really with me? This is a very quick revision. Already we are doing very quick marathon. Sir, even much faster, man. I am going to talk about fully self-occupied property. It's a how many step approach? 5-step approach. GAV, nil, less LT bar MT, NAV, 30%, 24B, 30,000 or 2 lakh as a case may be. So always loss from house property will be, in order to claim 30,000 or 2 lakh assessee should satisfy three conditions. Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition. Such construction or acquisition should be completed within a period of, from the end of the financial year, which the loan has been. Sir, in income from house property, this is not only for self-occupied property, but also for let-out property, whatever may be the property, interest will be classified into two categories. One is prior period interest, and the always prior period interest will start from the date of taking loan till the 31st March of the immediately preceding previous year in which the loan has been taken. This period interest, you can claim it as a deduction over a period of 5 years. And current year interest, 100% you can claim. That means interest on borrowed capital is equal to 1/5 of the prior period interest plus the current year interest. Comfortable, sir? Now, sir, under section 24B, deduction will be available only if you are traveling through the optional tax regime. You are not entitled to get under the default tax regime. Comfortable? And number two, if a property is fully let out throughout the entire 12 months, GAV will be a three-step approach. Fair rent or municipal value, whichever is higher or standard and whichever is lower, that answer is called as expected. And expected rent or actual rent received or receivable, whichever is. Since you are declaring GAV, can you reduce LT bar MT? Only two conditions should be satisfied. It should be paid and it should be paid by the, you will get the answer as NAV. Can you reduce 30%? Can you reduce IOBC? Kitana? Unlimited. You will get the answer as income from. That's what the story of the fully let out property. But let out property with vacancy, sir, you should be very careful, my dear lovable students, because you have to check that whether there is any genuinity of vacancy or not. First, you check the situation. Is the actual rent received is more than the expected rent or less than the expected? More than the expected rent, leave it. GAV is equal to actual rent received. If it is less than the expected rent, my dear lovable students, you have to check the genuinity of the vacancy. How to check the genuinity of the vacancy? Take the actual rent received, add vacancy rent, you will get the actual rent receivable. Compare the actual rent receivable with the, if the actual rent receivable is more than the expected rent, then vacancy is genuine, otherwise not genuine. Correct? If vacancy is genuine, GAV is equal to, if vacancy is not genuine, GAV is equal to, are you all really with me? That's it, my dear lovable students, with regard to the genuinity of the vacancy. Then you will get GAV. Technically, GAV will be either expected rent or actual rent received or receivable. Can you reduce LT bar MT? NAV? 30%? Yes, sir. IOBC? Yes, sir. Kitana? Unlimited. You will get the answer as income from. That's it. Fantastic to the core, man. Then coming to the, sir, house property let out for part of the year and house property self-occupied for the, this is time split. What split? 12 months has been split into 5/7, 7/5, 10/2 or 2/10 like that. That means what department is saying that once you let out a property even for a 1 day, that will be treated as a let out property. Hence, expected rent for the whole year or actual rent received for the let out period, whichever is higher, you have to declare as GAV. Manas konja varthamar sir. Paravalle. You can reduce LT bar MT 100%. You will get the answer as NAV. On that NAV, 100% 30% can be claimed. Yes, sir. You can claim IOBC. Unlimited you can claim. So we have given so much benefit to you. You just do one benefit to us. GAV you declare full. Are you really with me? You will get the answer as income from house property. And the next category is the portion self-occupied. And this is area split. What split? That is time split. This is area split. Sir, treat it as two separate house. Prepare the Vijay table. Are you all really with me? What Vijay table is saying that whatever relevant information in the question given, you tabulate in a table called as master table. Are you really with me? Then use the SOAP column for the SOAP, LOP column for the LOP. Then you can proceed the question. Are you really with me? If an assessee is having more than 2 houses, if he is having only 2 houses, no problem. It is allowed under the act. If he is having 3 houses, then you have to follow 3-step approach. Step number 1, treat all the houses. Treat all the houses. And number 3, apply the option. How you will apply the option, man? SOAP, SOAP, LOP, LOP, SOAP, 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 LOP. We are moving into the next concept of the house property, man, called as, rumba simple, sir, treatment of income from co-owned property. What property? There is one property is there, my dear lovable students, and that property is owned by 2 brothers. For example, brother number 1 and brother number 2. In whose hands income will be taxable. This is covered under section 26. Is covered under section. What section 26 is asking that you have to analyze the property and check that whether it is SOAP or whether it is LOP. If it is SOAP, sir, if the property is SOAP, one property is only there, but it is occupied by 2 people, then annual value of property of each co-owner will be nil. That means you have to do like this. If it is soap, self-occupied property, then sir, brother 1, brother 2, you have to do the question on an assessee based. What based? Because the IOBC can be claimed separately for brother 1 and brother number 2. Brother 1 can claim 2 lakhs separately and brother 2 can claim 2 lakhs separately. Are you all really with me? And each co-owner shall be entitled to a deduction of 30k or 2 lakh as the what may be on interest on borrowed capital. Are you all really with me? But if the property is a what? Lope, let out property. Don't do assessee wise. Do property wise. You are having only one property. That is GAV will be 1 GAV. Less LT bar MT will be 1 LT bar MT. Full LT bar MT. Then you will get the answer as net annual value. Reduce 130%. Reduce 1 IOBC. Are you all really with me? You will get the answer as income from. The answer what you are getting, you bifurcated into brother number 1 and brother number 2 based upon their share. For example, brother 1 is holding 50% share, income 50% given to brother number 1 and 50% share to brother number 2. Are you comfortable what I am talking? That means what section 26 is asking that analyze the property that whether it is sopa, lopa. Soapna tani taniya podu. Are you all really with me? Ena sendu poda mudiyadhu soap. Lopna unna potu pirichuko. Are you all really with me? That's what they rule in section 26. So income from such property shall be computed as if property is owned by one owner. So if it is lopna, treat it as one owner and computation once and after the income so computed shall be appointed among each co-owner as per their specific share. Comfortable what I am talking to you. That's it with regard to the co-owner. Sir, you have to try the questions from the co-owner man. Then we are having only one small topic called as unrealized rent and the what of rent, arrears of rent. Just now we talked about rule number 4, unrealized rent. If 4 conditions are satisfied, rule 4 satisfied, no need to pay tax for the unrealized rent, such as tenancy is bona fide, the defaulting tenant has vacated the property or steps has been taken to vacate him, or the defaulting tenant is occupying any other property of the assessee, or legal proceedings has been initiated, or you have to prove to the assessing officer that even after taking the legal proceedings, it will be useless. Are you able to follow this 4 point? But that guy is saying that since I have not paid the rent to you 3 years back, you said to me that get out. Now I am a billionaire, I am a millionaire. Keep your rent of 2 months or 3 months. Now this is a picture cast for me. Achambar order, appointment order. Mr. Pichumani, keep this rent. Then for me, I got that unrealized rent. What Income Tax Act is saying that since rule 4 has been satisfied at that time, you would have not paid the tax. But now you are recovering the income. So it should be taxable under the head income from house property. And in the year of receipt of the unrealized rent, sometimes you would have sold the property. Sometimes you would have, then capital gain would have came and you would have taxed the capital gain. No problem. As per section 22, in order to tax the income, you should be the owner of the property. But section 25A is saying that even though you are not the owner of the property, in future, if you recovered the unrealized rent or arrears of rent, it should be taxable under the head IFHP. So section 25A provides that a deduction of 30% of arrears of rent or unrealized rent subsequently by the assessee, taxable in the year of receipt or realization. Deduction at 30% will be allowed because this income has not been taxed earlier at all. This is the first time I am going to tax this income, correct? So for this income, you are entitled to get 30% taxable even if assessee is not the owner of the property in the financial year of the receipt or realization. That means this section 25A is overriding section 22. Are you all really with me? So simple. In this current year, if there is any unrealized rent, don't pay tax. But in future, if you realize the unrealized rent, pay the tax after claiming deduction at 30%, not under 24A. That section and all died, but under 25A. That is 24 small a. Under this section, don't claim 30%. Claim deduction under 25A. 25A. Are you able to appreciate what I am talking to you? That's it with regard to taxability of the arrears of rent or unrealized rent. We are having one theory section called as section 27, which is deemed owner. For example, if you are having a house property, you have transferred that house property to your wife because of the love and affection on February 14. and your wife is letting out that property, and you are saying that, sir, I gifted to my wife, sir. From here onwards, it is not my rental income, it is my wife's rental income. So, section 27, clause 1 is saying that if an individual transfer property to their spouse without adequate consideration, transferor is deemed to be the owner. You only said that you are loving your wife so much. What Income Tax Act is saying that pay the tax also on behalf of your wife. Then you will really love her. Sir, in order to reduce the tax, shift the tax from the husband's and to the wife, and only you transfer the house property. Section 27 is saying that still husband is the owner, is the deemed owner. Are you all really with me? Sir, if the transfer is connection to agreement to live apart, it is divorce, sir. High Court, Supreme Court only said that, please give that house property to her. She is only eligible to live in that house. That's why I given that house, sir. Then, sir, the transferee, the spouse, wife or husband will be treated as the owner, and income is taxable in their hands. Because after divorce, she is not at all my wife. She is some other person's wife. How it will be deemed owner concept will be applicable. That's it. Next one. Okay. I can't, sir, touch the spouse. Now I am moving into the minor child. I am moving into the, instead of showing love and affection to my wife, sir, the papa, come on. Sir, if an individual transfer property to their what child? Minor child. Without adequate consideration, transferor is the deemed owner. But there is exception. If the transfer is to a minor married daughter, then transferor is not the what owner? Deemed owner. Because they are having one family, correct? Don't, I am the deemed owner, and all say means, Mapla sometimes talking about your wife. Alright, sir. Even here, clubbing provisions under 64 subsection 1 applicable. I will explain the clubbing at the appropriate time. Hello, sir. If the cash is given to the spouse or minor child to acquire the property, the transferor is not the deemed owner, but clubbing provision would apply. Buddhisaliya, what you are doing, instead of giving the property, you are giving cash. And with that cash, either the spouse or the minor child is buying the property. Then only clubbing provisions will be applicable. Section 27 will not be applicable. Simple if you are having a house property. Without proper consideration, because of love and affection, if you are giving to your spouse or if you are giving to the minor child, still you are the owner. That's what section 27. Holder of a impartible estate. That means one estate or set of property are there which cannot be separated. In that, one of the property you have given to one person, then still you are the owner of the entire chain of property. Holder of impartible estate. What is impartible? Property that cannot be divided. Then it is deemed to be the owner of all the property in the estate. Next one, member of cooperative society or company. For example, you are a member of cooperative society or company or other association or person who is allotted or leased a building or part thereof is deemed to be the owner of the property, even though the society or company is the what owner? Legal owner. Sometimes if you see in Chennai and all, big flats will be there. The 100 flats, the legal owner may be in the name of the society. But in that, I would have purchased only one flat. I will be treated as the deemed owner, even though the papers and all will be there in the society name. Are you all really with me? Person in possession of the property. If you are having any property, sir, having more than, for example, person who takes possession of property in part performance of a contract is deemed to be the owner. Sir, person with rights in property for not less than how many years? You are taking a right in a property. You are taking any property for a lease not less than 12 years. Then you will be treated as the deemed owner. Are you all really with me? That's it with regard to the provisions of the income from house property. My dear lovable students, these are the major provisions we have to discuss. Mainly, property should be classified into how many category? 6 category. Fully self-occupied, fully let out property. Let out property with vacancy, partly self-occupied, partly let out, portion self-occupied, portion let out, and deemed to be let out property. Comfortable. We can start doing Super 3 sir past examination question before we wind up the marathon of income from house property. So that's it with regard to section 27. Sir, after section 27, we are having section 28, which is the charging section of the profits and gains of business or profession. That section 28, we are having one amendment. That amendment I will tell you at the time of PGPP, but cross-reference is there. What is a cross-reference? If an assessee is engaged in the business of letting out residential houses, not commercial. So, property classified into two categories, residential property and the commercial property. If you are letting out a residential property, that may be either for business or profession or other than business or profession, right? What the amendment is saying that if you are engaged in the business of letting out what property? Residential property. Income generate from letting of residential house or part of the house by the owner shall be chargeable under the head income from house property. That means residential property is equal to house property. That is amendment. Whether one residential house property you are having, you have let out that property, should be taxable under income from house property. I am having 25 residential house property. I am doing business with that. A business itself is letting out of the property. Sir, even though it is business, it will not be taxable under business or profession. It will be taxable under income from. But if the property is a commercial property, then altogether different. If with that commercial property business, then profits and gains of business or profession. So you have to check whether you are in the business of letting out of the residential houses or commercial houses. Are you all really with me? Residential property, whether if you are having one or many, whether you are doing business with that, always taxable under the head income from. So the slogan, one line is residential property is equal to house property. This is the one cross-reference amendment we are having. Actually, this is not an amendment under IFHP. This is actually amendment under PGBP, but I am giving a cross-reference. That's it, the major provisions of the income from house property. We will be trying 3 brilliant super question from house property. We'll try to apply. This is a MTP April 2023, March 2021 and April 19 question. This first question is little tricky, good question according to me. Be with me till I solve. Mr. Ramesh and Mr. Suresh constructed their house on a piece of land purchased by them at Mumbai. So 2 people are there. That's what they have given. You have to help me with the facts of the question. What is the name of the first person? Mr. Ramesh. What is the name of the second person? Mr. Suresh. Because the facts of the case will change for person to person. Build up area of each house means 2 houses they have manufactured, was 1500 square feet, ground floor and an equal area in the first floor. That means the build up area is equal to 1500 square feet SFT and 1500 SFT. Are you all really with me? Here also 1500 SFT and 1500 SFT. So ground floor 1500 and first floor also 1500. Are you all really with me? Continuing. Ramesh started construction on 1/4/2023 and completed on 1/4/2024. So start of the construction and completion of the construction given. Ramesh, when started man? 1/4/2023 and completed on 1/4/2024. Am I right, sir? Suresh started the construction on 1/4/2023. More or less both of them started on the same date, right? And completed the construction on 30/6/2020. But that guy completed only on 30/6/2000. Okay, fine, fantastic, sir. Ramesh occupied the entire house on 1/4/2023, right? So occupation is 100%. Here Ramesh 100% occupied. Both the 1500 SFT ground floor and 1500 SFT first floor. That means this is a 100% self-occupied property. Comfortable? So treat it as one property. Don't have ground floor, first floor complex and all. Suresh occupied the ground floor on 1/7 and let out the first floor for a rent of how much rupees per month? That means he is having ground floor and first floor. Ground floor he has let out the property as self-occupied. Ground floor is self-occupied property and first floor is let out property with 15,000 per month. Correct? For a rent of, because he started from 1/7. So 7, 8, 9, 10, 11, 12, 1, 2, 3. How much month? 9 months. So 15,000 into 9 comes to 1,35,000 will be the actual rent received or receivable. Are you all really with me? Continuing with the question, man. However, the tenant vacated the house on 31/12/2024. So there is going to be a vacancy. And Suresh occupied the entire house during 1/1/2025 to 31/3/2025. That means from January, February and March, there is vacancy. Correct? So 3 months vacancy. So I can't put 9 months because I received only what? 6 months. Correct? So 15,000 into 6 comes to 90,000. And even I don't know, is there any unrealized rent or not? I don't know. Now I am putting as if no unrealized rent. So 3 months is what? Vacancy. So this 3 months is also self-occupied. Not vacancy, it is self-occupied. Who started? Suresh started occupying the property. Correct? Look at here. However, the tenant vacated house on 31/12. And for January, February, and March, sir, it was not vacant. Who started? Suresh started the entire house. That means ground floor and first floor. Following is other information. Fair rent value of each unit, that is ground floor and first floor, is how much lakhs per annum? 1 lakh per annum each unit. That is ground floor 1 lakh, first floor 1 lakh. Municipal value of each unit, ground floor bar first floor, how much rupees per annum? Municipal tax paid, Ramesh, Suresh, total 8,000 and 8,000. Repair and maintenance, put it on dustbins. Correct? Yes, sir. Ramesh has availed a housing loan of how much lakh? 20 lakh. At the rate of, so loan, we have to bifurcate in table, so better for our writing. Loan at the rate of 12%. How much lakh? 20 lakh. Can we write date of taking loan? Date of taking loan is equal to 1/4/2023. I hope on that date only he started the construction. Am I right? Yes, sir. Suresh has availed housing loan of 12 lakhs at the rate of 10%. So, inga vandu loan at the rate of 10% comes to 10 lakhs. Am I right, sir? Yes, sir. At the rate of 10%. 12 lakhs. At the rate of 10%, 12 lakh. Super, sir. Now, tell me, when he started, man, on 1/7/2000 and so date of taking loan, sir, 1/7/2023. Am I right, sir? I'm proceeding, sir. No repayment was made by either of them till 31/3/2000. Compute income from house property for Ramesh and Suresh for the previous year 24/25 is the question. Is the question said that in what route they are traveling, like default or optional tax regime? No, sir. If you see the first person, that is, who is the first person? Ramesh, Mr. Ramesh. The entire house is a self-occupied property. Are you really with me? That means GAV will be nil. Less LT bar MT cannot be claimed as a deduction. NAV will be nil. 30% of NAV cannot be claimed as a deduction. IOBC, sir, the loan 20 lakh rupees is a loan. Correct? Yes, sir. He has taken loan from 1/4/2023. 23 means 23/24. And he completed the construction on 1/4/2024. So there is a prior period interest. So my dear lovable students, interest on what capital? Borrowed capital. For the first person, classified into two categories. Number one, prior period interest and the current year interest. Are you all really with me? Prior period interest will be from the date of taking loan, which is 1/4/2023 till always it will end on 31/3/2023. 23 or 24? 20 on 1/4/2024 they have completed. So 31/3/2024 should be the right date. Correct? So 23/24 only 1 year is there. So prior period is, what is the loan, my dear lovable students? 20 lakhs. 20 lakhs into how much percent? 20 lakh into 12% comes to, but this cannot be claimed in one shot. Correct? This can claim it in, so 1/5 of the prior period interest is equal to 2,40,000 divided by 5 comes to 48,000 is the share of the prior period interest. Can I proceed? My dear lovable students, coming to current year interest. Current year is nothing but the current year. Correct? Which is 20 lakhs into 12% comes to 2,40,000. So can I calculate the total IOBC? So total IOBC is equal to 48,000 plus 2,40,000. Am I right, sir? Total comes to 2,80,000. But as per section 24B, this will be restricted to how much lakh? 2 lakh. And I am assuming that assessee is traveling through the optional tax regime. Otherwise, this much calculation will be waste. Correct? Fantastic to the core. I am going through the answer and checking what is happened. Computation of income from house property of Mr. Ramesh. Sir, GAV is nil. Because for a self-occupied property, GAV is always nil. Less deduction under section 24B. There is no concept of LT bar MT and all. NA will be nil. 24B, interest paid on borrowed capital 20 lakh to 12% come to 2,40,000. Right? That is the current year interest. Then pre-construction interest. We all know that 2,40,000 is the last year interest. That can be claimed over a period of 5 years. So 48,000 rupees is the share of 1/5 of interest. So total 2,80,000 is there. But as per second proviso to 24B, interest deduction will be restricted to, so loss under the head income from house property to Ramesh will be 2 lakhs. Are you comfortable? Since Ramesh is fully self-occupied property, no confusion, only 24B consequences are there. Now coming to Suresh, is having 2 floor, my dear lovable students. One is ground floor and what is doing with the ground floor is the question. With the ground floor is what doing? Self-occupied property, and let out property is first floor. So self-occupied property and let out property. What is the SFT? 1500 SFT and 1500 SFT. That means proportion is 50-50. Correct? So if you see gross annual value less LT bar MT paid by the owner, you will get the answer as net annual value. Less deduction under section 24A. Less deduction under section 24B, which is interest on, you will get the answer as income from house property. Right? Actually, what has happened is the first 1500 SFT throughout 12 months it was self-occupied. Correct? So GA will be nil, LT bar MT will be nil, NA will be nil, 24A will be nil. You will be having only IOBC. Correct? My dear lovable students, what is the IOBC? 12 lakh rupees is a loan. Yes, sir. This 12 lakh comprised of actually date of taking loan is 1/7/2023. That means 23-24. Our year is 24-25. Correct? So again, I have to calculate the interest on what capital? So interest on borrowed capital classified into 2 category. Number 1, prior period interest and also the current year interest. Am I right, sir? With regard to prior period interest, what is the date of taking loan? 1/7/2000 and when they have completed the construction 30/2000. Even though it has been completed on 36/2024, always we should end with 31/3. So it should end with, my dear lovable students, to 31/3/2024. That means only 23-24 is there. That too 7, 8, 9, 10, 11, 12. 1, 2, 3. How much month? 9 months is the prior period interest. What is the amount of loan? Tell me quickly. 12 lakhs into rate 10% into 9 divided by 12. Comfortable? So 12 lakhs into 10% into 9 divided by 12 comes to 90,000 is the share of prior period interest. Correct? But this has to be claimed over a period of 5 years. So 90,000 divided by 5 comes to 18,000 is the share of interest that can be claimed in financial year 24-25. Correct? But in 24-25, the property is classified into 2 categories. Number 1 is soap 50% and what? That means for soap 9,000 will be the allowable interest and for lope 9,000 rupees will be the allowable interest. Are you understanding? That is total interest which you can claim will be 18,000. But in this year 9,000 and 9,000. Look at here, man. Look at the working and clearly understand. Computation of deduction under 24B. Interest on what capital? Borrowed capital. You tell me, current year interest I am calculating. I have not calculated as working. Straight away I am putting. What is a loan? 12 lakhs into rate 10% comes to 1 lakh. Out of this 1,20,000, 50% of the house is soap. 50% of the house is, that's why, sir, 60,000 for ground floor and 60,000 for first floor. Comfortable? Coming to pre-construction interest, man. 12 lakh into 10% into 9 by 12 come to total. This 90,000 cannot be claimed in one shot. 90,000 has to be claimed in. So divided by 5 come to 18,000. But during our year, 9,000 is ground floor and 9,000 is. So total deduction under 24B will be 69,000. What, man? That's what this 69,000 has been written. Now, ground floor, is it self-occupied? GA will be nilla. LT bar MT cannot be claimed as deduction. NAV will be nilla. 30% of NAV will be nilla. Just now we computed the IOBC, 69,000 loss. So income from house property, 69,000. Are you following? Coming to the first floor, man. Actually, what happened to the first floor was, sir, from 1/4/2024, when the construction has been completed, 36/2024. That means for April, May, June, 3 months it was under construction. Am I right? Then from 36 you let out the property. Correct? For, sir, till 31/12/2024. Correct? So 7, 8, 9, 10, 11, 12. How much months? 6 months actually this property was let out property. Then for the next 3 months you itself start using the self-occupied property. Correct? So this period you don't consider, my dear lovable students. But this period, what actually happened? Out of 6 type, what type this is? This is partly self-occupied and partly let out. Even one day you let out a property, you have to treat it as a let out property. But there is a big twist in the question. The big twist in the question is, if you see, my dear lovable students, they have given fair value. Fair value is how much lakhs per annum? 1 lakh. Municipal value is 72,000 per annum. Correct? So, fair rent is equal to 1 lakh and municipal value is equal to 72,000. Are you all really with me? Actually, this 1 lakh is for 12 months and municipal value is for, actually this 3 months property itself is not there. Then I have to convert this into 9 months. Are you all really with me? Because only property got birthday of last 9 months. So 1 lakh into 9 by 12 comes to 75,000 is the applicable fair rent. Then 72,000 into 9 by 12 comes to 54,000 is the applicable fair rent. Are you all really with me? That means, my dear lovable students, now I have to compare that expected rent for the whole year or let out for actual rent for the let out period, whichever is. For that, I have to check fair rent or municipal value, whichever is higher. 75,000 or 54,000, 75,000 is the higher, correct? Is standard rent details given in the question, not given in the question? Skip step number 2. Or actual rent received or receivable for 6 months, you have let out for 15,000. So 15,000 into 6 comes to 90,000. You tell me 75,000 or 90,000, whichever is higher. That's why GAV is 90,000. Are you able to appreciate? Here, don't say that vacancy is there. Here, there is no vacancy because first 3 months property are under construction. Last 3 months property has been self-occupied. There is no question of what at all, vacancy at all. So, can you reduce LT bar MT? Yes. Here, one of the beautiful, another twist is there in the question. Municipal tax by Ramesh 8,000. Put it on dustbin because entire first house has been self-occupied. But Suresh, out of 8,000, 50% is self-occupied and 50% is let out. Only 4,000 can we claim it as a deduction. Don't reduce entire 8,000. You will be getting NAV on, you put 30%. Already we finalized IOBC. You will get income from house property. Again, that is a loss. These are the working note and notes. Computation of GAV of the first floor of Suresh house. First floor, if a single unit of property, in this case, first floor of Suresh house is let out for some months and self-occupied for the other months, then the expected rent of property shall be taken into account for determining the annual value because expected rent for the whole year or actual rent received for the expected rent shall be compared with the actual rent. Whichever is higher shall be adopted as the annual value. In this case, actual rent shall be the rent for the period for which property was let out during the year. Expected rent is higher of fair rent at what value? This should be considered for how much month? 9 months, since the construction of property was completed only on 36/2024. Are you able to appreciate, sir? So expected rent is 75,000. How you got, sir? Fair rent totally for entire 12 months 1 lakh into 9 by 12 will be 75,000. Municipal value 72,000 into 9 by 12 will be 54,000. So actual rent is 90,000 because 15,000 per month for 6 months from July to December. So GAV will be 90,000 being the higher of expected rent of 75,000 and actual rent of 90,000. Are you able to appreciate? Coming to illustration number 2. So good question, illustration number 1. You try by your own and if you go wrong, you check it. You are required to compute the income from house property for assessment year 25-26 of Mrs. Rajnikant from the house property of P in Haryana. That's it. Municipal value of the property is how much? 7,50,000. Very important information. Fair rent of the property is how much? 6,30,000. And standard rent is how much? 7,20,000. Right, sir. Property was let out for 80,000 per month for the period April to November. What happened after November? Tenant vacated the property. And Mrs. Rajini used the house for what occupation? Self-occupation. Again, this is also from partly self-occupied, partly let out. Rent for the month of October and November could not be realized from the tenant. We have to check that rule 4 condition are what or not. Tenancy was bona fide, but the defaulting tenant was in occupation of another property of the assessee. Rule 4 condition has not been. That means even though you don't receive rent for October and November, still you are liable to pay tax. Paying rent regularly, she paid municipal tax at the rate of during the year and paid interest of 50,000 during the year for the amount borrowed towards repair of the house property. Simple question, normal question, house property question. First, you have to apply the timeline, my dear lovable students. 12 months totally are there. Out of the 12 months, there is a split. First, how much months? Property was let out for 80,000 per month from April to November, correct? So, till November 2024. That means April, May, June, July, August, September, October, November. How much month? It's a game of 8 months and 4 months. 8 months, this property was a let out property with a rent of 80,000 into 8 months comes to 6,40,000 is the actual rent received. This period 4 months is a self-occupied property, my dear lovable students. No need to check the genuinity of the vacancy and all because there is no what at all. Vacancy at all. So tell me fair rent or municipal value. What is fair rent? 6,30,000. Look at the question and participate, man. 6,30,000. What is the municipal value? 7,50,000. You have to take whichever is higher. So fair rent or municipal value, whichever is. So 7,50,000 or standard rent is there. How much is the standard rent? 7,20,000 is the standard rent, right? Whichever is lower. So the expected rent is equal to 7,20,000. My dear lovable students, if there is any vacancy, I have to go and check. Correct? Here there is no what at all. This house property will fall under which category of house property? This is partly self-occupied. If it is partly self-occupied and partly let out, still it has to be treated as a let out property. Then GAV is equal to expected rent for the whole year. The expected rent for the whole year is 7 lakh or actual rent received for the let out period 6,40,000, whichever is. Actually inside this 6,40,000 unrealized rent is there, but rule 4 condition has not been. Hence the GAV is equal to 7,20,000. If you come man, GAV, look at here man, I have finalized the gross annual value as 7,20,000. Once you get GAV, everything is pakka. GAV is 7,20,000. Can you reduce LT bar MT? How much is the LT bar MT percentage given in the question? 12%. So what into what? 7,50,000 into 12% comes to 90,000. NV is 6,90,000. 6,90,000 into 30%. So 1,89,000. Am I right? 6,30,000 into 30% will be 1 lakh. Now interest on borrowed for repair. It is fully allowed because this is a let out property. In case of let out property, sir, loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition. Such concepts and all not applicable. So entire 50,000 can be claimed as a deduction. You will get the answer as income from house property. Are you comfortable? I'm moving to the last question from our revision series. Mr. Kushal is a resident but not ordinarily resident in India. Sir, if an assessee is resident and ordinarily resident, global income is taxable in India. If an assessee is a resident but not ordinarily resident, only if the income is received in India, it will be taxable in India. During the assessment year 25-26, he furnishes the following information regarding his income or expenditure pertaining to his house property for the previous year 24-25. He owns 2 houses, no problem. 2 is allowed. One in New York and other in Ahmedabad. No issue at all. House in New York is let out there and rent of $5,000 per month. The entire rent is received in India. Since you are a resident but not ordinarily resident, since the income is received in India, the entire income will be taxable in India. He paid property tax of $1,250. Can we claim it as a reduction? LT bar MT, whether you paid in India or, and severage tax of $750 there. LT bar MT, local tax. This severage tax may be local tax of that country. Correct? INR 81 has been given. So 1,250 plus 750 comes to how much? 2,000 total into what? 81 comes to 1,62,000. The house in Ahmedabad is self-occupied. No problem. 2 houses can be taken. He had taken a loan of 30 lakh to construct the house on 1st September 2019 at what? 10%. The construction was completed on 31st May 2021 and he occupied the house on 1st June. The entire loan is outstanding on 31st March. Property tax paid in respect of second house is 2,800. Put it on dustbin because that house is a self-occupied property. LT bar MT cannot be claimed as a compute the income chargeable under the head income from house property in hands of Mr. Kushal for assessment year 25-26. If he has opted out of the default tax regime under 115 BAC, then they are entitled to claim deduction under section 24B. Are you able to appreciate? Modalla, I will be finding out the let out property in New York. How much rupees is the GAV per month? $5,000 into 12 into 81 comes to 48,60,000. Are you all really with me? Less municipal tax or local tax paid. Total $1250 plus 750. Sir, total $2,000 into conversion rate what? 81 comes to total 1,62,000. Will you get NAV in Indian currency, which come to 46,90,000? Adoda 30% comes to 14,09,400. There is no IOBC has been specified in the question. You get the income from what property? House property. But income from self-occupied property in Ahmedabad, since it is SOP, GA will be nil, LT bar MT cannot be claimed, NAV will be nil, 30% will be not applicable, but you can claim IOBC alone. But for that IOBC, you have to calculate the prior period interest and the current year interest. You tell man, for the prior period interest and the current year interest, when the loan has been taken. Now, interest on housing loan for construction of self-occupied property allowable as deduction under 24. Interest for the current year, they themselves said that no principal has been repaid. What is the amount total? 30 lakhs. So 30 lakh into 10% comes to 3 lakhs. So there itself answer over because it should be restricted to. But for the completion of answer will show everything. Pre-construction interest from the date of taking loan 1/9/2019. Always pre-construction interest will close on 31/3/2021. Correct? So you are having 1920 and 2021. Correct? But 1920 you are having only 6 months because September, October, November, December, January, February, March 7 months. Because it is from 1/7/19. So September means from September if you count 7 months. Yes sir, because September, October, November, December, January, February, March. And 2021 you will be having 12 months. Correct? So 12 plus 7 comes to 19 months is the total. Are you all really with me? That's why they have given 19 divided by 12. So 30 lakhs into 10% into 19 by 12 comes to 4,75,000. But this 4,75,000 cannot be claimed in one shot. It can be claimed only in. So divided by 5 comes to 95,000. Correct? So 3 lakh plus 95,000 comes to total 3 lakh. But that 3,95,000 will be restricted to. That's what they have written here as 2 lakhs. So you are getting loss from house property. Correct? My dear lovable students, you are having income from one house in outside India. New York house, you are having income of 32,88,000 and self-occupied property in Ahmedabad, loss of 2 lakhs. So the net income from house property, 30,88,000. Are you all really with me? Since Mr. Kushal is a resident but not ordinarily resident in India, for assessment year 25, income which is inter alia received in India shall be taxable in India, even if such income has accrued or arisen enge. By virtue of provisions of section 5 is the scope of total income comfortable. Accordingly, rent received from house property in New York would be taxable in India since such income is received by him in India. That's it with regard to the Super 3 question, past examination question of income from house property. Are you able to connect the provision into the question? If yes, sir, redo all the 3 questions. We are done with the marathon of the income from house property also.